everybody's glad to be here. I am, and our impressive lineup of speakers. Very warm welcome to our big cold lunch. Look at that, 320 of you. Yeah. Yeah, all brought together with an absolute minimum of organisation, up to normal standards. Just written a cheque to Justin Hems for $38,000. So beautiful space, enjoy it. We pay for it and the sponsors pay for it. And I just would like to, I actually can't read them all from here today, which I do like to do, but if you would like to just cast your eyes along our list of sponsors from that side, all the way back down along here, our major sponsors, BDA, Johnny Mac, and AME Group, and Coal Australia, and the others down there, New South Wales Mining, RWS, Taurus, who's here today, Tees, and I can't read the last ones. But anyway, the reason that we are able to welcome you every time is that actually we keep the lunch at $95 a head, no matter what. That's where your sponsorship money, the sponsorship money goes, because it costs us about all up an all-in sustaining cost of about $200 a head to have these events. So that's why you thank your sponsors. That's why when you see them, you thank them in person, and better still, you bring them your business. So that's how this place works. I feel like I have to introduce myself for the first time ever. Julian Malnic's my name. I'm chairman of this thing, and I've been running it for 27 years. And oh, thank you. Oh, thank you. Yeah. It is a great pleasure. Every now and again I feel like kicking the cat, and then it's showtime again, and how great it is to be together. What I love about it is that it promotes the industry among us. We see each other, you know, that's why I love that hubbub at the beginning, because everyone's swapping notes and meeting and arranging and doing stuff together, and it's our turf. You are in, you know, this is the heart of the Sydney, New South Wales industry, and it's great to be together. You know, at a time when you'd have to say our industry's yet again under considerable threat, but there'll be lots said by our speakers on that note today. We'll have Steve Galilee will be speaking for a bit. We'll hear from Yari, which is a new little coal explorer, and then over to Stuart Bocking. Courtney, what's your surname again? Taylor. Okay, so I can now introduce Courtney Taylor properly. See how organised I am? There you go. You get mentioned twice now. And then Rob Bishop and Andrew Boyd. So that's our running order. Before we go, where's Shireen? Shireen from IMARC. I can hear you. There you are. Was it yellow? Okay, all right, thank you. Now, ladies and gentlemen, we have a lucky door prize here, which is this beautiful broken wood Shiraz Magnum, and one of you is going home with it. Second prize is an empty cardboard box. No, that's for they go together. So if you pull out your cards, you remember the gift card at the front door, the IMARC card, you may have a yellow dot on your card. So as soon as we have a yellow dot, we'll move on. Righto. Anyone got a yellow dot? Have we got another colour, Shireen? Red, have we? Okay, last call for yellow dots. Okay, come and get it. Well done. Carlos, well done, mate. There you go. Well done. And you can take the cut too, mate. Okay, a bit of fun. So IMARC is coming up. We're supporting IMARC. We have a great relationship with, it's the biggest show in Australia by far. Bigger year than ever, I understand, Shireen. A new record-breaking crowd here in Sydney, in beautiful Sydney, where we don't have riots and protesters outside like they do in that other city where they used to hold it, somewhere south of this place. Leading Edge. So our next event, Leading Edge event, let me read you, if you could just give me a moment, I'll read you the next Leading Edge companies. We've got Grant Hayward from Maritana Minerals, Fraser Tabert from Alma Metals, Paul Stephen from Gold Arc Resources, and Christopher Clark from Rocket DNA. Rocket DNA is a very interesting drone company that's doing great work in our sector. So those four will be on. Remember, the next one is on down at Hinchcliffe House, down the back of, immediately at the back of Customs House, Leading Edge. And they're now a lunchtime event, so you'll be getting flyers on that. Now I'd like to bring your heads into the room with a story about coal. 900 metres below me right now is a seam of coal. It's about 1.5 to 2 metres thick, and it was mined in the Balmain Colliery, which was a 900 metre shaft sunk right around, started just before the turn of the last century, and amazingly there were horses walking under Sydney Harbour, pretty much where the first fleet had pulled up. The first coal, and I bet you don't even know this, Nick, who discovered the first coal in Australia, Nick? Captain Cook. No, there you go. Get a real job, mate. So when the first fleet left England, the Industrial Revolution was already going. They were burning 3 million tonnes of coal a year in England. So the steam engine had been invented, the flushing toilet, the submarine, the Industrial Revolution was well underway. So the trip, the first fleet was essentially on a camping trip when they came down here. They had hatchets and spades and fishing hooks and all the things you'd put in your pack if you're going camping. When they arrived, there's a great book by Bill Gammage, and it's called The Greatest Estate on Earth. And when they arrived, all of the lands around Sydney that they could see and far and beyond were all meticulously cared for by the Aboriginal residents, who burnt all the firewood for energy and tidied everything up, had great rangelands burnt to hunt on. They burnt a lot of country off, and in this book, they compare the paintings of the first arrival with photographs of the same spot today. And we can see what we see as bush was often just clear, open, rolling land. Now, so when they came ashore, the 1,336 people who came ashore one night, there was pretty much automatically an energy crisis because all the sticks had been burnt. And there were 52 cauldrons of coal in the first fleet, but they were for the forges. They weren't for keeping warm. So there was a lot of contest there was an energy crisis effectively, and the most unlikely two people to discover coal were two convicts who escaped. And they took a longboat and they went out of the heads, and their names were William and Mary Bryant. And they sailed north, and they were going to a place called China. And on their way north, they pulled in at, I've got some pictures of this if you wouldn't mind bringing them up. This is where they pulled in at the mouth of at Swansea. And you can see the coal seam in the rock platform there. And they pulled in their little longboat after, on the run away from the colony. And today, I went there, that's my hand up there, you can find pebbles of beautiful black coal were rolling around on the rock platform. They found those there, and they said they found a place where we picked up coals as good as any in England, took some to the fire, and they burned exceedingly well. Nick, there's one more image. There's the seam in the rock face at Swansea, which is a great place to go and pay your respects to the discovery of coal, which I did. And who'd have thought it was a couple of convicts? However, when you sail a little boat north and you get near the Torres Straits, you suddenly get whooshed through. You don't go to China, you get whooshed through this massive current, and they got spat out to West Timor. Bad luck. What happened was they ran into a guy called Captain Bligh, who just happened to be there at the same time, and their story didn't stack together very well, so he went, hello, 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 you better come back to England with me. So they got back to England and they told everybody about the discovery of coal, and it was published in a London newspaper on July 3rd, 1792, that there was a discovery of coal. However, no, everyone forgot to send a copy of the newspaper to Sydney. So it was 10 years, another 10 years would go by, burning sticks and competing with the Aboriginal residents of this country, essentially in an energy crisis, before coal was discovered. It was then discovered fairly simultaneously on three fronts: in Newcastle, Lithgow and Wollongong, Coalcliff, and each of those three places would give rise to steel mills, to the industrialisation. The fact that we are the geometric centre of one of the greatest Permian coal basins in the world is why Sydney is so rich, where our wealth came from coal. We were mining right under this city, and on all its flanks. So we then built a beautiful bridge out of steel from England with English coal. Our entire heritage of this city is built around coal, and the first mining then was, eventually after that newspaper didn't reach Sydney, the first coal was actually discovered as I say, simultaneously, but the first extraction was done at the mouth of the Hunter River, and Governor Hunter dispatched a vessel to obtain the first coal from Newcastle in September 1800. And that was the day that all of this camping trip rejoined the coal economy of the world as it was launching. So on that note, having brought us all into a good coal mindset, I'd like to ask, I'll ask my good mate Steve Galloway, where are you? Over here. Well, be up here. Come on. As you know, Steve's a great friend of the organisation, often the chairman, and good to see you, mate. You got things to say?
I've got a few things to say. Just an update on the HVO project that I know many of you are interested in. We're in the dying stages, the final stages of what's been a rigorous assessment process with the project now at the Independent Planning Commission for its assessment. As you know, that means 3 faceless bureaucrats will decide the fate of this project after 4 or 5 years of assessment by the Department of Planning. The Department of Planning, in its report assessment report that was referred to the Independent Planning Commission, it noted the benefits and the impacts of the HVO continuation project and stated that its assessment was the impacts could be managed consistent with government policy. So that's very encouraging. We're very encouraged by that. But I think it's important to note that there is very strong opposition from certain parts of the activist community and also from within the government itself. The Net Zero Commission, recently established, is also a highly vocal opponent of this industry and also of this project from within government, and that's why this week we called for the Net Zero Commission to be abolished. Now,
what about IPC while you're there, right?
Well, let's get the approval first. Let's get the approval first. Now, I know many of you have been following this closely, and a few weeks ago the Independent Planning Commission held its public hearings in Branxton, and then another online session of hearings a few weeks ago. And at midnight last night, I mean, you don't get a more dramatic deadline than a midnight deadline, do you? So at midnight last night, the Independent Planning Commission deadline for public submissions was reached, and they're now cut off, and they're assessing the final batch that they received. But we checked this morning, and look, I am quite disappointed to say that there were 2,240 submissions lodged in objection to the project, which is not great. But I'm thrilled to say there were 5,310 so far in support, which is a 70% support rate, and it's not likely to change much by the time we got our submission in, didn't we, Andrew? So yeah, we're good. So there's strong community support for this project. There's strong industry support for this project, and we've been working with the proponents and with the Mining Club and with Coal Australia and other associations and industry groups to get this project over the line. I know many of you in this room lodged submissions in support, whether it was encouraged by the Mining Club or the Minerals Council or Coal Australia, and we thank you for that. We're going to continue to work closely with Glencore and Yancoal to get this project over the line, because this is the most important mining project approval that we've seen over the past 3 or 4 years. We have not had a significant coal-related project go to the Independent Planning Commission since the last state election. This is the big one. There's 1,500 jobs at stake. They only have their approval to run their operation until December this year. If they don't get their approval, 1,500 jobs are gone before Christmas. It's why it's so important to us. We have other projects, other coal projects coming through the system. We have 12 separate coal mining applications of the 38 coal mines in New South Wales seeking to extend their operating lives, and several of them will go to the Independent Planning Commission as well in the time ahead. And that's why this symbolically and from a policy perspective is so important. So please keep watching the HVO process. Julian, if this thing is refused, I've put the government on notice that we will be marching in the streets and rallying out the front of Macquarie Street. So there'll be a run on Eureka flags. There won't be any left in stock. I'm optimistic, but we're not taking anything for granted. We want to make sure that this thing gets over the line. It's important for the coal industry here. It's important for the mining industry more broadly, and for every single person in this room. When future projects go to the Independent Planning Commission and you get those emails from us and from the Mining Club and others asking you to make a submission, please do. Please do, because we saw a late flurry of submissions coming from the activists over the past 24 hours. A few days ago it was 85% support. The final numbers are going to be around 70% because they mobilised their people towards the end. So when you get those requests, please do so. It doesn't take very long. Those numbers are important. And we thank all of you for your support so far in this process.
Yeah, great.
Thank you.
Yeah, great, mate. Yeah. So think about that for a moment. You think of the depth of requirement that each of those departments would have that you need to satisfy. So you go through all of that process, and then they hold you up in a court of public opinion, where people like the Environmental Defender's Office, funded by the federal government, your government is funding the opposition to this project, and they then soak up huge amounts of time in the hearing, and then at the end the faceless bureaucrats, Caesar-like, without any accountability, do this. Either we get and this is to continue an existing mine. So, I mean, it's pretty exasperating. On a very hopeful note, I'd like to welcome Courtney Taylor to tell us about a coal exploration company. So, Courtney's absolutely got this one come on up. Full of optimism, and just want to give you a little profile on Yari, please.
Thank you. I just need to lower these. Thanks for having me. It's great to be here. My name's Courtney Taylor. I joined Yari in January this year, and I recently transitioned to Managing Director of Yari. I moved from Adelaide to the Bowen Basin, specifically to Middlemount, in January 2010 to commence my career as a mine geologist with Anglo. Since then I worked for Vale. Rob, you were there too. And then since then worked in various roles, moved across to BHP before coming to start Yari. Now, I looked at this project a while ago. I actually did some consulting on it 8 years ago. Our main asset is Rolleston South. You might have heard of it, for those who've been in the Bowen Basin for a while, as Consuelo. It's changed hands and changed names a few times, but I'm looking at this as a much bigger picture. So Rolleston, the area is full of coal, but one of the problems in the Bowen Basin is we've got a lot of projects which are tied up with majors, and then we've got a lot of ground which has been very tightly and privately held for a really long time. And one of the benefits of me being a listed company is I've got the opportunity to raise funds and to help progress these assets by putting them in a public company and progressing the Bowen Basin. There's so much coal at Rolleston, and I'd love to see it come into production, and that's what I'm actively working towards, as well as potentially advancing some other projects in the Bowen Basin. Won't take up too much time. Our ticker's YAR on the ASX. We're probably the best buy on the ASX as well at the moment, so if anyone's looking, I'm in Sydney for another day. But thanks for having me, and also big thanks to Coal Australia for all your support. I know I've got a big challenge on my hands, getting some new projects across the line, but hoping we see some changes. We're definitely seeing some more support with approvals, but we need a bit more support in a few other areas to see these projects come into line. I think as well, everyone wants to stay living and working in the Bowen Basin, and unless we get some new projects online, in 30 years, we don't know what that's going to look like. So thanks everyone. Please reach out to myself or Sam if you want to catch up after this, and thanks again for letting me jump up here and crash your event.
Courtney.
Thank you.
You're welcome any time, and I just want to say that I totally respect the fact that you've got such aspiration. It's one of the things that's so good to see. You know, we all try to aspire in the face of, you know, what our treasurer is doing to us, and you know, so many points of adversity. So why don't you got the ticker? Just on principle, why don't you go out and buy yourself a little bundle of these just to pass on the good vibes.
Best buy on the ASX.
Best buy on the ASX. Yeah, and that was investment advice. Yeah, blame me. Rolling along, I think we're about time for Stuart to take the stage, and I'm not going to compete with Stuart. I'm going to go away. So over to you, mate. And we're pretty good for time, but we'll be good. Okay.
Have we got a ticket for the...
Yeah, I dropped it on the floor.
Oh, where is it?
Right down there.
Oh, sorry. Thanks. Terrific.
Smooth that one off.
No, that's right. Terrific. Thank you very much, Julian, and thank you very much to all of you who are here today. Can I acknowledge the Chairman of Coal Australia, Rob Bishop, who's here, and a number of our board members, including Mike from Whitehaven and also Andrew from QMetco, and you're going to get to hear from both Rob and Andrew coming up. Also our founder, Nick Jorss, a number of our other producer members who are here today, and of course many of our associate members. It's great to see so many of you here, and importantly, fantastic to see so many people turning out in Sydney to celebrate coal, pure and simple. And that is what is most important, because what this demonstrates yet again is the way sentiment on coal is shifting, and shifting fast, and there is no getting away from that. If we have a look firstly, last week we released the first ever inaugural annual coal report, and you've all got copies of that at your place today, along with the Coal Australia hats and also the I Love Coal or the Coal Australia pins, and we'd love for you to take that away. I want to say this work was put together in conjunction with the state industry bodies who do resources expenditure type studies every year, and we were able to break that out for a coal-specific report. And to all of those bodies, I say thank you, and importantly, obviously, the New South Wales Minerals Council's here today, and I say thanks to their CEO, Steve Galilee, and his fantastic team for the work they do. But what this demonstrates, for the first time, is the enduring resilience of coal as a commodity and the driver it is for our economy, in terms of the expenditure, in terms of the value of the sector, in terms of the jobs that are created, the money that is spent on wages and salaries, the knock-on effect to so many suppliers around the country, and importantly, the many other families who benefit indirectly as a result of coal. And for the first time, we get that snapshot, and we've been able to break it down from a national perspective, as a state perspective, a regional perspective, and then also importantly by state electorates, by federal electorates, to demonstrate once and for all why it is that coal is so important. We know it's our second biggest export earner, but we can sometimes forget the numbers that are behind it, the jobs that are behind it, the families, the households, the many communities that would not be the communities they are today were it not for the prosperity from coal. And many of those are regional communities where if suddenly coal wasn't there, those communities would look very, very different. Places like Mackay, Middlemount, Muswellbrook would look drastically different if you were to take the billions of dollars away from those communities that is currently being generated by coal producers, coal suppliers, those involved in the logistical supply chain, and all of the other people that benefit from that. I also want to acknowledge, before we go on, there was a fatality at Wombo United earlier this week, and unfortunately that does demonstrate the inherent risks that go with coal mining, even many tens of years on since we first did it. Obviously, all of our producer members, all of those involved in the supply chain take inordinate lengths to ensure the safety of their workers. There is nothing more important than ensuring that each and every one of those people comes home to their families and loved ones every day. And unfortunately, this week we had an incident where that won't happen, and our thoughts are with that man's family, his colleague and friends. Now, we often hear coal's in the rearview mirror. It's a stranded asset. If this is a stranded asset, I'd love to be on the same desert island, because that to me is looking far from stranded. These are IEA figures which go out to 2030, and as you can see, the global demand for coal remains above 8 billion tonnes per year. Last year, we set a record, the highest ever global demand for coal at 8.85 billion tonnes, and we are likely to see a similar figure this year. And what's driving that? Well, obviously China is there as a runaway consumer of coal. It's broadly stationary but fluctuating. India certainly on the rise, ASEAN nations on the rise, and the rest of the world relatively steady. So the idea that coal is going anywhere quickly other than enduring, resilient and strongly in demand is a nonsense. And the pretense otherwise is frankly quite laughable. You look at the situation in terms of met coal, and we'll hear from Andrew Boyd a little later on. Australia is the largest exporter of metallurgical coal anywhere in the world. 45% of the world's exports come from Australia. And look at who our four biggest customers are. They are China, India, Japan and South Korea. And what are they? They are near neighbours. So huge amount of demand being driven in our part of the world for met coal. How blessed we are that A, we have the best coal in the world, be it thermal or met coal, and how blessed we are that so much demand is being driven by our near neighbours. Why would we not continue to supply that coal while that demand is there? And I'm pleased to say that the updated strategic statement on coal in New South Wales that was recently released by the New South Government recognised that very fact. The statement was first released by the government in 2019, the then Liberal National Government in New South Wales, and was updated just a few months ago. And while they certainly ruled out the use of greenfield sites, what they did continue, importantly, was an acknowledgement that New South Wales should continue to support extensions and expansions of existing coal mines while ever the demand was there. And the reality is that demand is there, and it continues on. And we saw an example of this with a story in the Daily Telegraph only last week. World craves Aussie coal. The headline wasn't world abandoning Aussie coal. The headline wasn't stranded asset Aussie coal, please throw us a bone. World craves Aussie coal. It could not be clearer than that. And of course, we've spent time amplifying the coal report to try and highlight to not just people in this room, but the many other people who fleetingly just flick a switch at home and expect the lights will come on, or the air conditioner will whiz into action, or the dishwasher will do what it needs to do. A whole heap of other people who aren't necessarily that engaged in what we're doing. And so we were talking about the coal report on social media. We were on Sky News, or now News 24. We were in the Courier Mail in Queensland. We were on Ben Fordham's 2GB radio program as we seek to amplify the important role that coal has, does and will continue to play in the Australian economy. But, of course, that's not to say it's all an easy ride. If it was, Steve and I'd be out of a job, and mercifully we're not. Chris Bowen has been busy at the National Press Club running down coal. He's trying to claim that maintenance issues with coal-fired power stations are pushing up our power bills. I would want to remind him, without coal, we don't have a power grid. That is the reality. Without coal, there is no electricity grid. And if the breakdowns are so severe, how is it that the New South Wales government's updated strategic statement on coal 2026-2050 confirms almost 60% of electricity in New South Wales across the 2024-2025 financial year was generated by? You can answer the question yourself. Of course, it was coal. At present, that figure is routinely 70% and higher. In New South Wales, the operation of the Eraring Power Station has already been extended twice. I wouldn't bet against it being extended again. After all, Eraring supplies 20% of the state's electricity needs. And we all know the demand for electricity is not static. It's certainly not reducing. The rise of data centres will require increasing supplies of electricity. So again, thermal coal will continue to play an important role, and so will Coal Australia. Because nothing we do in this sector happens without government approvals, without government regulations, without government say-so. And that's why it's very important that we have events like we did in Brisbane last week with our coal industry dinner, where we had the Assistant Mines Minister, Anthony Chisholm. We had the Leader of One Nation, Pauline Hanson. We had the Shadow Minister for Resources, Susan McDonald. We had the Queensland Minister for Resources, Dale Last, and that panel was moderated by Chris Jones, the editor of the Courier Mail. A few months before that, we were in Canberra, and this was an extraordinary turnout, highlighting just where the sentiment has shifted even with our politicians. And I often say to people, don't expect politicians to do the hard yards if you as an industry aren't doing them yourself. They will very happily follow a sentiment. They'll very happily get behind things if suddenly some survey or some polling is suggesting, well, the tide is turning on coal. And groups like Coal Australia is actively working to do that. We want to create the safe space for our politicians. And guess what? We had Labor's Federal Minister for Resources, Madeleine King, at that event. We had the Assistant Minister for Resources, Anthony Chisholm, at that event. We had Labor backbenchers such as Dan Repicoli and Meryl Swanson at that event. But we also had the Leader of the Opposition, Angus Taylor, who seemingly is being paid every time he mentions coal at the moment. He can't get enough of the stuff. We had Dan Tehan, the Shadow Energy Minister. We had the Leader of the National Party, Matt Canavan, who was happily saying coal long before sentiment started to shift. We had the Shadow Minister for Resources, Susan McDonald, there. A number of backbenchers, and we also had the Leader of One Nation, Pauline Hanson, a number of other Labor backbenchers, One Nation, you name it. Again, everybody there gathered to highlight the importance of coal and coal mining. And so that political advocacy is an important part of the work that Coal Australia does. But so is mobilising grassroots to highlight to people why it is that coal is so important. Because for a lot of people, they're not as engaged in this stuff as we are. But it's important as a sector that we continue to highlight that. We now have more than 140,000 average Australians, not all of them supporters, I think the odd one works at the ABC, but they have signed up to our newsletter, they have signed up to receive information from Coal Australia, and importantly, they are an important conduit to your average rank and file Australian to help highlight why coal is so important. And the best news is the facts are on our side. Incontrovertibly, the facts are on our side. The recent CSIRO Gen Cost review, that's confirmed on a levelised cost basis, pound for pound, with relevant transmission costs included, coal remains the cheapest form of electricity generation. AEMO, the electricity market operator, its updated 2026 integrated system plan, that now confirms that coal will remain a part of the national electricity market through to 2049. Only 2 years ago, when the previous ISP was put out, that had forecast a domestic phase out of coal in our grid by 2038. And so in the space of 2 years, that outlook has now been extended by 11, with coal still forming a part of our electricity grid. The Queensland Government's new energy roadmap plans to keep more coal in the grid for longer, and even leaves open the prospect of a new coal-fired power station being built. Who could have imagined that being uttered by a government even 5 or 10 years ago? But that is the reality of where we sit today. These are all independent analyses, various elements of where we've seen things go that demonstrate that here we are, coal in 2026 remains alive, well, and far from being on life support. And when it comes to mobilising that base of very interested supporters of coal, to Steve's point earlier, in terms of Hunter Valley operations, an absolutely critical project. What have we been doing? Well, we've had regular mentions on this in our newsletter. We've had social media outlines. We've also put a submission of our own in, and I'm pleased to hear the Minerals Council got their submission in on time. I can only imagine that would have been an epic fail. You could see the headline now. Net Zero Commission calls for abolition of New South Wales Minerals Council, having failed to lodge a submission in support of HVO on time. And also, importantly, with that 140,000 plus database that we have as the Friends of Coal, we can geo-target our emails, which is precisely what we did on Tuesday, to send out to almost 50,000 people across New South Wales to say, get your submission in, directed them to the link, highlighted it was an existing mine and that it needed to be approved and that their support was important. And so we've continued to see that occur, and that is absolutely critical. And of course, then we come to one of the elephants in the room, the Net Zero Commission. This is Chris Minns's Frankenstein. If ever there was buyer's remorse, this is probably one of them. A Net Zero Commission will do what a Net Zero Commission is going to do. Frankly, the last thing anyone needs is another taxpayer-funded travelling cocktail party, but we've got it. And here they are completely at odds with what the government's own policy is, which is to support the extension and expansion of existing coal mines. The Net Zero Commission is saying, well, no, that's actually incompatible with our goals of reaching net zero by 2050. They forget one important word, net. It's not about zero emissions. They're not the Zero Commission, although we probably wish they were. It's net zero. That talks about offsets. And we've even got the perverse scenario now where they're suggesting if we do establish a Great Koala National Park in New South Wales, as this government has outlined, that somehow the carbon credits from that project shouldn't be applied to fossil fuel projects. So hang on a second. We're told that whether they're Scope 1, Scope 2 or Scope 3, they're all emissions, so they all should be counting. Well, surely the offsets are offsets regardless of where they come from. You can't decide which projects are worthy of a carbon offset and which project is not. It is ludicrous, but this is the sort of thing we're dealing with in 2026. And of course, there will always be the spectre of activism, and we saw recently a group on Newcastle Harbour, and we're happy to engage from a very safe distance, which we did, with a Skyrider, which put the point very clearly and very simply that we love coal, and we do. And I note today in closing the Chanticleer column in the Financial Review, writing about Glencore's potential listing on the Australian Stock Exchange. The headline says it all. Glencore bets that Australia's woke anti-coal era is over. Amen. The article notes that Glencore loves its coal, has no intention of dropping coal, and no time for the coal doubters and the headaches they bring. Australian Super, the biggest super fund in the country, that already is a significant investor in other coal mining producers in Australia, is loudly urging Glencore to list locally. And the article says it shows the super sector is not all off coal, and nor are Australian capital markets more broadly. Again, a sign the sentiment is shifting, in large part because reality has collided with ideology. Physics, economics will not be defied, and nor will Coal Australia. Thank you very much.
I just want to single out Nick Jorss, who's been the godfather of Coal Australia, and for putting it together and getting it live and running like this, and having Stuart, who was former Chief of Staff of a New South Wales. Oh, there you are, right in front of me. Yeah, well done, mate. Yeah. Yeah. Like you don't have enough other things to do. Oh, you've got a beer company too now, haven't you? Queensland Beer Co. It's drunk by Thurston and many great Queenslanders. So sort of go Thurston thirsty. That's a bit of a thing there. Listen, don't forget about buying some shares for Courtney's Yari. Courtney, I'm reminding you. Aspiration, reward it. And we're going to go on and talk about a couple of other stocks here, the New Hope Group and QMetco. I was struck, Stuart, I was actually struck during the fuel crisis, the great thing about having so many EVs is actually we can keep them running with coal when we get constrictions in the liquid fuel supply on imports, which is a profound advantage. And the great thing is about driving a Tesla is you don't have the embarrassment of having to pull up at a service station and shovel the coal into the boot of your Tesla. We actually deliver the energy to your garage down a wire, and you can then drive down the street and pretend it's all run by wind and sunshine. So, how good was that deal with Albo announcing that we were selling our uranium to India, eh? I mean, we do all these things because, the world's watching us and we're an example of how to conduct yourself and on the path to net zero competitiveness. But how about that? I mean, they do it without any shame in you're not allowed to do it in Australia, but India, you want to buy some uranium, unbelievable. Anyway, so in the running batting order is now, I'd like you to join with me, bang your hands together and welcome to the stage Rob Bishop to tell us the New Hope Group story. Rob. You all good?
All good, mate.
Prime?
Thank you for that.
There's water there if you need it.
Perfect.
Go well.
Thank you all. I guess, first of all, and Stu touched on it, I just want to acknowledge the recent fatality, and I guess it's not just one. I think we've, in the space of less than a week, we had two fatalities, obviously the one which Stu mentioned, but also up in Queensland. We had one probably less than a week prior. So, I think as an industry, we pride ourselves on probably being a leading industry in safety and safety culture. But, certainly when we have these incidents, it really challenges all of us. And, I think from New Hope's perspective, we had a fatality at Bengala probably just under a decade ago, and that certainly is something we keep in our minds constantly, and that strive to ensure we keep everyone going home safely. So so that's, it's important for I think everyone to reflect on that. But I think, looking around the room, looking at all the Coal Australia merch, it's pretty exciting time for this industry. For many years we struggled to have a voice, and obviously Nick had a big part to play, and as New Hope and Whitehaven and a few other members here, we sort of backed that pretty early on. So I could sit here as the chair of Coal Australia and Spirit Coal Australia, but I think Stu probably gives us the best injection, probably almost as good as Nick a year ago, and I think both of them have successfully stolen a lot of time from me and Boydie at this, like the last time I spoke here. So, but instead of talking about Coal Australia and the general industry, my role here is to, I guess, unashamedly spread the good word about New Hope, which I was going to say was the best stock on the ASX, but that's been stolen from me, so we'll go with the second best spot. So thanks, Courtney. And yes, we did spend some time at Varley together, and there's a few other Varley alumni here. So where's this? Probably don't need to see that. So yeah, I'm here to talk about New Hope. I've been there for about 6 years. I guess at New Hope, it's renowned for being lean. Back in the days of being in Ipswich, but it's certainly something which we keep a focus on right across the business and right up to the exec. So there's 3 of us on the exec. Rebecca is here, I think, just over to the left, and so is Dom. So, but certainly, I guess today I'll run through a bit of an overview of New Hope's operations, our growth outlook, and touch on current market conditions. As I said, company is Southeast Queensland based, or that's where it started over 70 years ago, when it started in the early 1950s. I guess today we remained a proud Australian coal producer focused on high quality thermal coal, supported by strategic infrastructure and agricultural activities. Our operations include Bengala Mine, and I'll get into a bit more detail on this, in New South Wales, and New Auckland Mine in Queensland, both of which play an important role in supplying high quality coal to the international and domestic markets. Across the group, we directly employ over 1,000 people and support thousands more jobs through our network of contractors, suppliers, and local businesses. Fair to say, a material contributor to a significant contribution the whole industry makes across Australia, and you'll see from the recent report which Coal Australia has released that it is immense. And I guess as a person who's been in the coal industry for probably 20, 25 years now, it still struck me by surprise at just that contribution. It's staggering. So fantastic effort to spread the good word, Stu. So I guess turning to our asset base, and you can see a map here. We've got our Bengala Mine, which is our 80% owned joint venture in the Hunter Valley and remains one of Australia's leading thermal coal operations. It's well recognised for operational excellence and its position as a large-scale, low-cost producer. New Auckland Mine, just west of Brisbane, continues to progress through its Stage 3 expansion following approvals in 2022. The operation is ramping up towards a 5 million tonne per annum mine and represents a significant upside contributor to our future growth. Our customer base remains concentrated in Asia, particularly in Japan and Taiwan, where customers continue to value the quality and reliability of high calorific Australian coal. Increasingly, we see our key export markets recognising that energy security and reliability remains essential consideration as they navigate increasingly complex energy transition, particularly highlighted again in the recent Middle East conflict. In addition to our operating mines, we hold just shy of 26% equity interest in Malabar's Maxwell underground mine. This provides exposure to semi-soft coking coal market and further diversifies our portfolio. Beyond mining, Queensland Bulk Handling Facility, based at Port of Brisbane, remains a strategic asset for the group. QBH provides export capacity and operational efficiencies for our New Acland operation and other key mining operations in the West Moreton Corridor. And finally, our agricultural business, Bengalla Agricultural Company and Acland Pastoral Company, which clearly demonstrates our commitment to productive land use and responsible stewardship of land we manage and operate on. So turning to Bengalla Mine, this remains our flagship asset, delivering strong margins throughout the cycle, given its large-scale, low-cost focus. The first half of 2026 financial year reflected a period of recovery at Bengalla Mine following significant weather events across the Hunter region late into 2025 financial year. While this temporarily impacted coal production, the operation has returned to 13.4 million tonnes per annum coal production rate in the third quarter of the 2026 financial year, coupled with an FOB cash cost, excluding royalties, of 74 Australian dollars per sales tonne for the quarter. A pretty solid result, it is fair to say. Keeping this low-cost base is a constant challenge for us, but this is where innovation is playing an increasingly important role at site. In an industry where regulatory costs and operating imposts continue to increase, Bengalla focus is on remaining a safe, reliable and cost-competitive mine. That means empowering the people closest to the work to identify practical improvements, using technology well and making decisions within clear guardrails. We see the best outcomes come from when there is a clear structure, a defined envelope for teams to operate within, and the right long-term partners who understand our business and are committed to working with us over time. A good example of this at work is at Bengalla relates to projects which use operating data and machine learning to predict potential thickener overload events at the CHPP before it results in a plant shutdown. This value is not just the technology itself, it is the way the solution gives operators early visibility, aligns with site response type processes and enables practical actions by people closest to the issue. While we continue to focus on operational excellence at Bengalla, we also have our eye on the future. Bengalla provides New Hope Group with attractive opportunities to extend operations and maximise the value of our existing infrastructure and coal resources. We have secured exploration licences to the west of our existing permitted area, and you can see them on our map. And this, I guess, enables us to sustain long-term returns for shareholders and the communities that we operate in, should obviously the relevant department approve that permit. I think Coal Australia is going to go a long way to support that. At our New Acland mine, this mine remains one of the most exciting growth opportunities within our portfolio and essential to our long-term growth strategy. Acland has delivered a strong half-year outcome, and we continue to see the site safely ramp up to circa 5 million tonnes per annum run rate. Like Bengalla, New Acland also benefits from a low strip ratio, around about 3.5 to 1, which is probably slightly lower than Bengalla. This supports an ultra-competitive cost base and also enhances its long-term value. In addition, our ownership of key underground titles helps us to reduce the impact of Queensland royalties, and I think Boydie's probably going to touch on that later. Effectively, when royalties increase, New Acland moves further down the cost curve as a material part of the royalty liability is paid to our pastoral business. It's potentially one of the more profitable pastoral businesses going at the moment. Looking ahead, mining activities in the Manning Vale West Pit are expected to commence in the fourth quarter of 2026 calendar year, reaching the final milestone in the mine's growth journey up to that 5 million tonnes run rate. Works associated with the public road realignment are underway, with both projects progressing and expenditure aligned with the contracted schedules and budgets. It's fair to say New Acland has been on a significant journey, from an extended approvals process to now focusing on disciplined execution of its ramp-up. As the operation matures, the focus is increasingly on embedding strong processes, building capacity, building capability, and identifying practical opportunities that support the site's transition to safe, steady-state production at that 5 million tonnes. The site does have specific constraints to manage, the key challenge being noise, but that also reinforces the importance of thinking differently, improving the way work is planned and executed, and empowering the team to pursue safe, practical initiatives that help unlock ramp-up opportunities within the required operating boundaries. Overall, New Acland continues to perform strongly and remains well positioned to deliver increasing production and value for shareholders over the years ahead. So looking ahead, we're focused on delivering the organic growth, which you can see in this graph. That includes the ramp-up of New Acland Mine, strong and consistent production at Bengala Mine now that we've bedded down that growth project, and the development of Malabar's Maxwell Underground Mine. Importantly, all of these assets sit low on the cost curve and provide a solid foundation for future growth. We continue to see the benefits of this strategy. Our attributable sales coal production has increased from approximately 7.2 million tonnes in financial year 2023 to 10.7 this year, and then we'll get up to 15. The focused ramp-up positions us well to generate long-term value through increased production, a disciplined approach to capital allocation, and continued operational excellence. Excuse me. So looking at market conditions, and I think Stu touched on this already, but coal prices have moderated over the past year. We still remain well positioned to navigate a cyclical market. As touched on earlier, our portfolio is built around low-cost, high-quality assets, which provide resilience across a range of pricing environments and supports ongoing margin generation. That resilience has been demonstrated repeatedly over the years. Even during periods when coal prices have fallen to multi-year lows, our operations have continued to generate significant margins. And even in probably the last year, we're probably sitting at about a 40% margin. Looking at recent market trends, the GC Nuke Index has average price decline from approximately US $136 per tonne in the first half of the financial year 2025 to US $108. During this period, the group still generated a strong underlying margin. During the second half of the financial year, the geopolitical uncertainty, including ongoing conflict in the Middle East, this has reinforced the need for energy security and highlighted the importance the role of thermal coal continues to play in supporting reliable energy generation. Against this backdrop, we remain confident in the quality of our assets, the strength of our balance sheet, and the ability to create value through our commodity cycle. So just touching on guidance, we've recently finished our financial year, probably only a few days ago, and we're tracking well. We're pleased with obviously the third quarter data we've got on this slide, but the important thing is both operations have delivered safely and strongly, and we look forward to sharing the results in the market very soon. I think we'll release our quarterly activity report on the 17th of August, which will provide additional insight. But I think from when we look at those data there, I think we're probably at the higher end of all the volume metrics and at the lower end of our unit cost guidance on that slide. So that will be good to share in September when we put out our annual report. So from a market outlook perspective, and I probably won't labour on this too long, we had Stu present some, but it's pretty compelling. If you look at the slide on the left-hand side there, you can see a significant increase in global power generation by fuel source and the demand which is going to be there. I think in the last year, the outlook for or the estimate for energy demand in 2050 of what was expected a year ago to what it is now has increased by about 8%. Just in 1 year, the 2050 demand has increased by 8%. So I think the demand piece is certainly getting stronger. And although coal is I guess, reducing as a percentage of that, ultimately, given the increase, coal demand in actual tonnes is increasing over that time. So we're not too concerned about the demand piece. And then on the right-hand side there, you can see the thermal coal supply against that demand. And certainly we're going to see a big drop-off in tonnes as we get to the end of this decade and to early in the next. I think we've got about 40 to 50 million tonnes coming out of the Hunter Valley alone in the next 5 to 7 years. So a pretty compelling story. Obviously, we'd like to see that supply not fall off as much, but I guess those that are operating are going to see the fruits of that outcome. So I guess To finish this off, before I take some questions, if there's time, I'll leave you with what I believe is a pretty simple yet pretty compelling investment proposition that we have here at New Hope. I guess first of all, we operate in an industry that continues to play an important role in delivering reliable and secure energy supply across many parts of the world. Secondly, our portfolio consists of low-cost assets that have demonstrated their ability to generate positive returns through periods of softer coal prices. Thirdly, we take a disciplined approach to capital management and shareholder returns. Fourth, we maintain a strong balance sheet that provides resilience through market cycles and the flexibility to pursue growth opportunities when they arise. Fifth, we are committed to operating safely, responsibly and sustainably, recognising that these principles are fundamental to our long-term success and future approvals. And finally, we have a compelling organic growth pipeline led by New Acland Mine, which provides a clear pathway to increasing production and creating additional shareholder value. So I guess our strategy isn't complicated. It's about safety, operational excellence, and we invest carefully and maintain financial discipline. And most importantly, we continue to remain focused on creating sustainable long-term value for our shareholders. Thank you, and I'll take some questions if there's time. Yeah, very good.
We'll get the three of you up afterwards and do the questions.
Perfect.
Great, thank you. Andrew Boyd to give us the QMetco story. Just before we go there, you might remember my offspring, Flynn Malnic, doing some chairing up here. We're trying to get more young people to do this stuff before they get taken away to a project in the middle of nowhere. He's been last 3 years with Anglo's. You probably heard that Grosvenor and Moranbah North have had all kinds of troubles up there. He was a ventilation officer on the day that they had the explosion underground 16 months ago, and had to evacuate and do the restart. And so 16 months later, they finally got it up again. They quelled the reaction, reintroduced the workforce in stages, and it's got a terrible problem with the roof falling down a lot, but the mine's now, in the last month, if anybody's interested in that industry news, they've produced 660,000 tonnes in a month. So Moranbah North is up running again. It has had a cost. Flynn is now on stress leave, burned out completely, and he's about to go and spend a month in Bali and try and get his sanity back, but he stared it down. He made the distance, 29-year-old, so God knows how he got through all of that. A better man than I am. But anyway, that's a bit of news on Moranbah North, which is great to hear some positive news about a restart. So with that little intermission, please make welcome Andrew Boyd to tell us the QMetco story.
Good afternoon, everyone. If I could mirror Stu and Rob's comments about the 2 fatalities we've had in the industry in the last couple of weeks, we do focus on our people, we care about our people, we put a lot of time and effort into safety, and it's tragic when we see these things occur. So, my thoughts with the people involved, their families, their colleagues, and the people that are dealing with those couple of terrible incidents at the moment. So I'm privately owned, so I can claim to be the best privately owned mining company in the country, and I don't want your money either, so I don't want it at the moment. I guess that means I'm pretty lucky. I can pretty much say whatever I think, and there's probably a few topics we'll talk about that you'll get, my view of why we have some state governments and federal governments in this country that really don't want us to exist and what they're doing to achieve that. But I'll, will also, I won't just whinge about things, I'll tell you about some of the good things we do at QMetco, our great business, and what the future holds for us as well. So we, as I said, we're privately owned, predominantly a metallurgical coal producer, so PCI coal used in steel making. We've got one major asset up in central Queensland called the Foxleigh mine up near Middlemount. We also have a frac sand project over in British Columbia, which has been ticking along for a number of years and is reaching a pretty interesting point in its development as well. So I'll talk to you a bit about that. The QMetco business was part of Jorss T2 equity fund, was in the last 12 months or so was taken out of that fund. The fund was closed down, and we now have the fund investors as ordinary shareholders in our business. So most of our shareholders are US-based private investors, pension funds, and private investors. So you know, it's great that I don't have to peddle my wares on the ASX, but we do have a job to do, bringing our shareholders along and informing them and letting them know what we're doing with our business. A couple of my other directors are here today, so Gordon Galt and Mike Davies. Acknowledge them in the room, and also acknowledge a couple of our joint venture partners in the Foxleigh project. So POSCO, Mina and Brandon, I see you guys over there, and Norrie and Eugene from Nippon Steel, who are also joining us today, and both great supporters of the coal industry for a long time from our customer base. So I'll get to the frac sand project first, and then we'll move on to coal, as soon as we're here to talk about coal. But this is an interesting project. It's been part of the QMetco portfolio since 2020. And effectively, you know, not dissimilar to coal. This is, you know, a pretty simple commodity, but one that's in demand, and it will service a growing gas to LNG industry in British Columbia and Canada. So this project produces, or has the potential to produce, what is called a Tier 1 propant, which is frac sand used in hydraulic fracturing in deep gas wells. What the characteristics that you need are all around size, shape and strength of the sand particles. This project has those properties, and it just happens to be in the right place at the right time. If you can see there where it is there in sort of eastern BC, very close to a number of new LNG projects and gas fields that are on the cusp of being developed, or you know, in the process of being approved and developed, as Canada realises that it can increase its use and development of gas to LNG as well. So that's an exciting project for us. That is a multi-decade project. It just got its principal environmental approval back in July, and we're working towards FID for that project early next year. So all going well. There will be a funding piece associated with that project, getting that developed. And you know, we'll look at that pretty soon, but that's an exciting project for us, and one that I think will take off in the coming year or two. If I can move to coal. So Foxleigh. Many of you may have heard of the Foxleigh mine up near Middlemount in central Queensland. It's sort of in amongst a whole bunch of mines in that part of the world. We're near Anglo's Cap Coal complex, Peabody and Yancoal's Middlemount project, and you know, part of the Great Bowen Basin central Queensland coalfields. So I mentioned there that my business QMetco is a 70% shareholder in that project. We also have POSCO Australia and Nippon Steel Australia, who have been in the project for a long time and are also our biggest customers of our product. Great supporters of the project. It's a really interesting mine geologically, multi-seam, multi-pit, terrace mine. There's never a dull moment geologically at Foxleigh. If you're a geologist that wants to kind of get some challenges in coal, go to Foxleigh, because we've got walls that fall in on us, we've got coal seams that disappear, we've got all sorts of stuff going on there. But it keeps you on your toes, but it's good fun. It is a benchmark quality PCI coal. So PCI coal is used in the blast furnace injected into the bottom of the blast furnace to provide heat and carbon to the molten iron just before it comes out of the blast furnace. So a critical product, and what it does is effectively substitutes for coking coal put in at or coke that's put in at the top of the blast furnace. Almost all our coal is sold to long-term contracted customers in Japan, Korea, Taiwan. We've just started to sell a little bit into India, a little bit into Europe and other places as well. So we are trying to expand our sales book a little bit. Stu talked about contribution a lot, and really Coal Australia is about, really getting support for the industry and highlighting to everybody how important this industry is and how much we contribute. Our little piece, so Foxleigh produces about 3 million tonnes of coal a year. The Queensland industry produces 220 odd million tonnes, I should say. Foxleigh's 3 million tonnes. So we're, a little more than 1% of the Queensland export coal industry. Little Foxleigh employs 700 full-time people, right? That's 700 families that rely on that operation for their income and their livelihood. Not to mention the service providers and all the follow-on industries that benefit from that operation. We put a lot of effort into growing our people, so growing our pipeline of people through traineeships. We've got Indigenous traineeships with our local BKY Indigenous group. We've got new to industry people that we bring into our business, we train. We support, graduates in all sorts of different disciplines, vacation students. There's a whole lot of people that, that benefit from our existence. Not to mention financially, so we support a lot of local causes, a lot of local groups. I think it's fair to say Gordon, the Middlemount Golf Club wouldn't exist if it wasn't for Foxleigh. We've ploughed, we won't talk about how much money we've ploughed into that, but it's a lot. Let's talk about the state government royalties. $600 million we've put into the Queensland economy through royalties since 2022. That's $50 a tonne. And I will talk about royalties a bit further as Rob thought that I might. If I look at the business and, the amount we contribute, what we pay, royalties, income tax, payroll tax, safeguard mechanism, local council rates and charges, our effective tax rate is over 65%. Right, so every dollar that we make in, notional profit before those costs, I'm giving 2/3 to either state, federal or local governments, which I don't particularly enjoy. But it shows you the state of the industry and just how, I'll talk about how difficult it is to sustain this industry and how almost, I don't want to discourage Courtney, but just how bloody hard it is to justify a new project in Queensland with the fiscal settings that we have. But go for it, Courtney. All the best. Halfway, so I'm channeling Bon Jovi here. We're halfway there. We've been going for 25 years and we've just sort of revised our life of mine plan and we've got about another 25 years to go, which is great. So those 700 people, all of that community input, all of the things we contribute can continue for another 2.5 decades and probably longer if we're allowed to. That little tenure map there, so that the blue areas are our existing mining leases, and I guess the orange and green areas are different stages of exploration tenure that we have opportunities to develop, the mine life or the mine output even further, right? So we've got a big portfolio of tenements, lots of opportunity. If the governments would get out of our way, we could be there for a long time. Interesting, I think, in terms of the assets we've got there. So we've got the benefit of we've largely spent the money on the infrastructure, on the fleet, on the working capital, and the stuff that you need to develop a mine. So if I look at the assets we've got there today, there's probably over $1 billion invested. Now we continue to reinvest in sustaining capital, equipment replacement, all those sorts of things. But if I looked at Foxley today as a greenfield operation with 25 years of benchmark quality PCO coal in front of it, I couldn't justify spending $1 billion developing it, right? It just wouldn't happen. So, and that I think is the real issue for our industry. It's not the existing mines. We'll continue through, but as we close, as mines deplete, resources deplete, there just won't be any replacement capacity coming in. And I think that's the real shame and the real thing that the Queensland government needs to understand. Here's another challenge that we've got. And I haven't got any numbers on here, so it's a bit indicative. But the cost base of our industry, and coal's we're not Han Solo here. Like everyone, all mining industries are the same. Has really increased in the last few years. Now, unfortunately, I will tell you the red bar is royalties. But unfortunately, the real step up in cost coincided with a massive step up in Queensland state royalties as well. So you can see there over that period of time from sort of the 2020, 2021 to where we are today is over a 50% increase in our all-in cash costs, right? Which is a whole lot of reasons for that. Some of them are productivity related. Some of them are probably self-inflicted in terms of turnover of people and experienced people and quality of supervision and all of those sorts of things. A lot of them are pretty structural, right? The cost of equipment, the cost of labour, the cost of access to port and rail and all those other things that we need. So that is a real challenge. If you overlay royalties on top of that, it becomes an even bigger challenge. But that's life. We're here to deal with challenges. That's why we get paid, right? So what are we doing about it? I think that's worth talking about. Really, our story at Foxley is around controlling our own destiny. The operation, 3-4 years ago was sort of largely contract run. We had various service providers doing different bits of our operation. I remember my first board meeting, actually, I think it was May 2024, when we were reviewing our coal haulage contract, which was up for renewal, and we'd been tendering for that service. And we were finding that the cost increase for that service was going to go up by about 40%. And at that first board meeting of mine, my fellow directors said, "Well, we'll just do this ourselves." To which I thought, well, that's pretty exciting. I don't know much about running road trains and coal haulage, but we have done it ourselves, and we've been doing that now for 2 years. We bought the fleet, we employed the people, we're running the coal haulage business. It was done by a specialist, large coal haulage operator. And in the first year, we spent more money. We had to get the gear up to standard. We had to learn what we were doing. But guess what? In the second year, we're spending less money. We're saving money, and we're finding ways to utilise those people through the business and to really leverage off having that experience. So that's been great. The following year, we had a similar experience with our coal prep plant and train loadout. That was run for 9 years by a contractor. Same story. I won't name them, but they were getting towards the end of their contract, and I got them in and said, "What can you do for us? How can we do better? How can we get more efficient?" And effectively, they said to me, "Well, if you put more tonnes through the plant, you'll average down your unit costs." And so I said to the guys, "We might as well do this ourselves." So we have. We employed the team. We're running the plant ourselves. We're running the loadout ourselves. First quarter we ran the plant was the best performance of that plant in its history under QMetco's ownership, right? So that's been a great success. This year we had probably prior to this year 40% of our fleet we owned, 60% we hired, and we contracted out the maintenance of that fleet. Again, we were suffering with poor performance of the fleet, particularly the trucks, poor performance of the maintenance workforce, poor safety performance of the maintenance workforce, no continuity of people. So again, we made the decision through the support of our joint venture partners, and we went and bought 26 240-tonne trucks, and as a result, we've been able to reduce our truck fleet from 50 down to 40, and we're still doing the same job, right? And we're getting, more efficient trucks, less fuel burn, great availability, better performance. So I guess, we've learnt a lot as a business over the last few years, and it's really about, trusting yourself to have a go. I mean, what I would say to any sort of service providers in the room, if there are any, is, and I spent 12 years working for TEAS, and I see they're a sponsor here, so I don't want to be too dismissive of them, but my experience with the service providers in our industry in the last little while is they've lost their way and they've forgotten what they're there for. They need to be meeting their clients' needs and adding value, not just turning up as a provider of gear and people. They've got to innovate, they've got to be cost competitive, and they've got to create a reason for their existence. So that's a little bit of advice for anyone that wants to listen. I guess the other point, we'll talk about that truck fleet a little bit. Funnily enough, when I went to all the OEMs to buy a fleet of 240-tonne trucks, there were no battery electric ones that I could buy, right? Regardless of what some people in WA might say, they don't exist. So, when we talk about emissions reduction, decarbonisation, all those sorts of things, I mean, it's great to put motherhood statements on a slide, or to talk about, a pathway to net zero. But, as a relatively small mining business, when I go and buy gear, my only alternative is to buy diesel gear. And I want to make it more efficient. I want to use as least amount of diesel as I can, but I don't have an alternative to diesel gear at the moment. I guess the other thing we're doing, other than sort of controlling our own destiny, is just trying to get the focus on the important stuff, right? Let's not worry about what's not important. What's important to our performance? That's about getting the right team with the right culture, getting continuity of that team. For anyone that's operated in Queensland, the last number of years there's been a lot of churn of people, a lot of turnover, and that's just really destructive. So we've focused a lot on, let's try and train our people, develop our people, get as many permanents as we can, less labour hire, and really focus on trying to drive the right culture, right? And I think we've been pretty successful at that. More work to do. A lot of focus on safety. You'll see a couple of charts there on the right-hand side, and there's some of the things we focus on: labour productivity, diesel productivity, right? Like, what are we doing? Are we doing the same job with less people hours, less litres of diesel? At the end of the day, that's what this business is about. It's about using the resources that we have as efficiently as we can to produce our product. Righto, that's the stuff I can control. I'll get to the stuff that I can't now. So royalties I've touched on. So we've paid 600 million Aussie in royalties over the last 4 years since the royalty regime was changed. If I was operating south of the border, I would have paid 360 million, right? And it's actually $200 million more than I would have paid in the royalty regime that was in place pre-July 2022. So it's a massive impact on our business, right? Those numbers are huge, and multiply that by the rest of Queensland producers, and you can see the impact that has on your business. That little chart there is one out of Commodity Insights report that just shows the decline in coal production out of Queensland since sort of 2020, 2021. And that decline, unfortunately, will continue if that royalty regime stays in place. Now, demand hasn't reduced, as Stu mentioned and as Rob has mentioned. Demand isn't going down. But what's happening is that coal's been supplied by, if it's thermal coal, it's coming out of Indonesia, and if it's met coal, it's coming out of Mongolia and Russia. So, that feels a bit dumb to me that we would hobble our own industry to the extent that it declines and give jobs and economic activity and all the good things that come with it to Mongolia, Russia and Indonesia. Now, we continue to say this to the Queensland government, and it wasn't the Liberal government that's in place at the moment that put this royalty regime in place. It was the previous Labor government who did it with zero consultation. To date, the current state government hasn't come to the realisation, which it ultimately will, that it's going to need to change this regime because it is structurally broken. The line that they like to use is, well, we're providing stability to the industry. We're not changing it. Everyone knows what it is. That's the sort of certainty and stability that you might get by going to your proctologist for an appointment, right? Like it's certainty. You know what you're getting, but you don't like it. And I think the bit that's sort of missed a little bit is the cyclical nature of the coal industry, right? So when we have, it's boom bust, right? Like same as any commodity. But in the good times, you've got to be able to make that money. You've got to be able to reinvest. You've got to be able to, God forbid, give some money back to shareholders. And in the good times, you try to keep a decent balance sheet so that you can get through the difficult times. And I know, Bowen, Daryl and Nick had the experience of, the government taking 120 odd million, I think, of royalties off their business while they went through, and effectively put them into an insolvency situation. So, I won't go into it in too much detail. I could talk about it for a long time. We are making sure that the state government understands the impact of this regime. Stu and Coal Australia are doing a great job. The QRC are doing a great job, but we just need to keep banging the drum. I saw an interesting, actually I looked at Jamison Resources got a project in Canada. I looked at their investor presentation they released a couple of days ago, and in Canada, their project, over the life of their project, they would pay about $10 or $11 a tonne in royalties. If that same project was in Queensland, it's $40 a tonne in royalties. If it was in New South Wales, I think it was $25 a tonne in royalties, right? So the competitive advantage that we have with logistics, because we're close to the coast and the Canadian coalfields are a long way to the coast, that's all gone with royalties. I'll whinge about this one too, and then I'll move on. So safeguard mechanism. There's a lot of discussion about decarbonisation, about making the emitters pay, about having to decarbonise, and for those that aren't aware what the safeguard mechanism is, it effectively takes the top, I think it's the top 100 emitters, 200 is it, in the country, and applies a baseline to their operations, and then says, every year, your baseline is going to go down by 5%, right? So effectively, the gap between what you do emit and your baseline, which continues to fall, you've got to bridge that gap. The only way to bridge that gap is to buy these things called carbon credits, ACCUs, and then you've got to give them away. It kind of feels a bit weird, but we paid about $2 million in 2025 for ACCUs that we bought with one hand and then gave away with the other. We'll do about $2.5 million this year, and it just keeps going up, right? Because that 5% reduction continues. Now that safeguard mechanism is being reviewed, up for review. It's a federal mechanism. We don't know what it's going to do post 2030. Our hope is that it gets a bit more sensible, because as I said, there's not a lot I can do about my emissions profile. I'm not going to be Fortescue or Rio or BHP and tell you that I've got a decarbonisation plan, because my emissions are fugitive emissions that come from the coal when I mine it, or diesel that I burn in my operations. So there's very little I can do. I try to be more fuel efficient, but I can't find 5% year on year of savings. And as I said, I go out to buy new gear, I can't find battery electric alternatives, sorry. So, the little chart on the right there, that was some work we had done by John Polaris a year or so ago, that just looked at, I just said to them, look, what can I do? What are my options? And they basically looked at every part of our business and said, well, there's nothing that's economic for you to do. Basically, you've just got to keep buying these ACCUs and giving them away, and more every year, right? So, like I said, it's an odd situation, but at its worst, this could end up being 15 million a year or more. $5 a tonne. just another tax. And the crazy thing there, that bottom comment, so if you're an export-facing industry, then you get exemptions because they don't want to make you less competitive in an export industry unless you're coal. And we're an export industry, but we don't get any exemptions. Look, I'll stop whinging there. But, you know, I think you can see sort of some of the headwinds that we've got to deal with. And I think, you know, we're pretty good at dealing with geological challenges, operational challenges, workforce challenges, safety challenges, you know, but it's a bit harder when those challenges are imposed by, you know, different levels of government. But anyway, I still am an eternal optimist, and I think we've got a really great future ahead of us. You can see some good-looking blokes in front of a truck there. You know, one of the things that I'm very fortunate of is that you know, our board and our shareholders have retained a very strong balance sheet and not put us in a situation where we're challenged from a liquidity perspective. And I think in this business you need that. If you don't have that, then you're in all sorts of trouble. But we've got, you know, at Foxleigh, as I said, we've got 25 years ahead of us. We've got a plan to expand in the near term up to 3.5 million tonnes a year from the sort of 3 million level that we're at the moment. We've got great joint venture partners. We've got great customers that continue to want our product. But, you know, in order for us to really thrive, we need, you know, some sensible policy settings from the various governments. And Vitrio, again, is an exciting little project that I think over the next 12 months will reach FID, and we'll look for a financing solution and become another string to our bow. So I am an optimist, but and proudly a career coal person, and thank you for your time today.
Sorry? Stick around, we'll do some questions.
Yeah, cool. Yep.
Stuart, would you and Rob like to come up and we've had a very full day, and but we have got time for some questions. Be shame not to. And then we have some gifts for you guys. And for the gift part, I might get Steve Galloway to give me a hand. Would you like to do that when we got our traditional gift there? I always love it when you tell the story behind that. Yeah. No, we'll do the question first, but you can. Look, there's a question down the back. Bang, straight away. Can we take a mic back there? On its way. Over here. That looks like a George Edwards to me. Yeah. Join the club.
My comment is to Stuart, but before that, a piece of useful trivia. Sir John Kerr, a past Governor-General of Australia, his father worked at the Balmain Colliery, or so he told me. Stuart, I commend you and your team for all the hard work you're doing. Keep it up. The biggest problem I see for our industry is polluting the minds of our children and grandchildren. Are you having any interface with the Teachers Federation? Because they don't want to know anything about coal or mining.
Yeah, okay. There you go. Steve might have something on that too, if you want.
Well, what I can say is the best way to a child's heart is with a show bag of some description. So stand by, because there could be Coal Australia show bags coming to Mine Open Days near you very soon.
Yeah, great. Yeah, happy birthday, a piece of Metco. Okay, here we go. Beautiful. There's a mic on the way. Just hang on, otherwise we won't. There you go. Beautiful.
Thanks for your talk, Andrew.
Talk right down the barrel of that thing, mate.
I've got a question. I mean, you talked about the punitive Queensland royalties that you face, as the entire coal industry does. I'm wondering about your thoughts on green steel. and the introduction of hydrogen reduction, electric arc furnaces and so on, and how you view that in the future with respect to your market.
Yeah, look, I think the best way to answer that is what my customers are telling me. If I went to Asia 3 years ago, there was a lot of discussion about green steel from the big steel makers in Korea and Japan. If I go there now, there's not much, right? And I think there's a recognition from those steel makers that, blast furnace, basic oxygen furnace steelmaking is still the most competitive economic form of steelmaking and will be for a long time. And I think what that's led to is a realisation that security of supply of raw materials for that process is really critical. So when I go to Japan and Korea, not many people mention green steel to me.
Yeah. Okay. That was great question. Because you'll often hear people. See a couple more questions coming up. Okay, we'll go over here next. But it is, around. You often in conversation, you'll hear people throwing the line around green steel like click your fingers and the steel. Now it's green. Turn base metals into gold. So where's the next mic question?
Yes, thank you taking my questions. Just two questions. One question for New Hope and the other one for Andrew.
Oh, great.
So the first one is because I'm a long-term investor for New Hope, and I have to say, you're running a very productive operation. I mean, now it's inflation, but you can still keep your costs down. And I look at your last quarter, you still can generate a lot of free cash flow, and also you got about $500,000 cash in your account. So now August is the reporting season. So I just wondering, you're going to make a decision about how to distribute those excess cash to shareholders.
Pretty smooth.
So my question is, my question is about I look at the last 10 years in the Australian equity market. The highest total return is like a Fortescue. Fortescue returned like $45 billion in cash dividend, but they only spent about $100 million over the 10 years bought their own shares. But the worst performer is like a CSL. They spent like 8 years buying back their shares, spent $1 billion, and the total return is only like 30%. But Fortescue, the total return after 10 years is 2,400%. So the second point is like I look at your current financials. You still have about $100 million sitting there for mandated for buying back shares. So considering like buying back is very much an American concept because their dividend is double taxed. And Australia, we're the only country having franking credit. So I just want to ask you, what's the possibility you can suspend it or even allocate that $100 million towards your cash dividend? So that will at least give you a 1 or 2% lift to your dividend yield.
There you go.
And the second question about to Andrew, okay, to be fair. I'm very impressed by the last photo.
Questions have that little wiggly thing on the end.
Okay. I'm very impressed by the last photo you represent us because it's, I look at all the people you employ. It's all over 65 years old. So you must paying very senior wage. So you must be running a very profitable, your profit margin must be very high. But having said that, actually, I find that like in Australia, like the thermal coal is very, the company the profit margin very high, but the Metco, a lot of company just break even. So can you share with your wisdom and knowledge why that is the case? My observation is about because Metco is very much about the got to do with steel making, and the Chinese refinery they are controlled. 75% of the global refinery of steel is controlled by is.
Oh, we're going to have to get to a question here soon, mate.
Yeah. Yes.
Yeah,
So-
I can't even remember where your first question was.
All right. I just finished.
Can anyone remember? Do you know where we're up to? Okay. Okay.
So it's the like the Chinese one, the refinery.
We need some music.
No, I just want to finish it. It's very important for Australia because what happened in the Chinese refinery is they squeezed the Australian upstream the producer because they control the price. So as a country, we really have to also build our own refinery instead of sell to China, which we should.
Mate, I'm losing this crowd. Can we stop now?
All right, I apologize.
Thank you. Yeah, great. All right.
I'll answer it quickly.
Have a crack at something, if you know what you're doing.
So I think I remember probably about 20% of that, but I could probably answer this and become the number one listed stock again. But certainly our focus is on shareholder returns. I think we've got the highest franking account balance based on our market cap, probably across the whole ASX. But our focus at the moment is really finishing off our organic growth. We've got capital to spend at primarily at Ackland to ramp that up. So that's probably the key focus from a capital perspective, capital management perspective. But certainly dividend returns to shareholders is a key focus. You're quite right. We've got a significant cash balance. I think it's probably circa around 700 million or thereabouts. And you touched on the share buyback. You know, that's there for a reason. It's not always appropriate to execute. I think we probably executed about less than 10% of the 100 million, which you touched on. But depending where we are in our price, we will execute that. But shareholder returns is our focus and always has been.
Okay. So, whoever else had a question? Really? Is it really, really quick? Yeah, okay. Yeah, anyway, we ate up all the question time just then.
Yep.
This will be the last one.
Look, Hunter Valley, cornerstone, as you said, for coal production in Australia since the very beginning. I'm just looking at the potential developments there to fill what is a declining long-term trend. We've got a great investment in the port rail system, and just looking at what New Hope has outlined today, both with the Malabar investment, it's great to see the longwall up and running and that operation ramping up. That's an extremely important development for the state of New South Wales. What New Hope are obviously doing at Bengala and assuring the long-term future there. I'm just wondering if I could ask Rob very quickly in terms of those future developments to not only maintain once we get the ramp up, but take it further and ensure the long-term history of longevity of Hunt Valley operations. Thank you.
Yeah, sure. Thanks for the question. I think at New Hope, we've made it pretty clear that we're focusing organic growth, but also on growth through M&A. And I think our investment in Malabar in the last few years is a signal of that. But I think your point is valid that production is going to decline in the Hunter Valley before it grows again. That's an outcome of a lot of activist movement. But from a New Hope perspective, we're certainly looking at extension of Bengala, and I touched on in the presentation the likely progression to the west. We have 2 exploration leases to continue our mine post 2037 when we expect to be out of our reserves in our current permits. So the New South Wales government is supporting that through the recent paper they put out on coal. That's certainly supportive of extension in existing basins. My understanding is that expansion's a bit of a dirty word within the government, but certainly extension is supported. So we're confident we'll get that extension. There's a lot of studies to do and a lot of, hoops to jump through. But, for a company like ours in a basin, like you said, with all the infrastructure, it makes sense for the Hunter Valley to continue. And, Wayne and the team are here from Malabar doing a great job. I was down there last week and saw the longwall firsthand operating. That's an exciting project, and they'll continue to ramp up. So, unfortunately, as I said, there's probably about 40 to 50 million tonnes coming out of that, and we've got challenges. Mac Energy, our neighbour to the north, is in the High Court. Hopefully that's a positive outcome, but and then obviously HVO. So, but certainly it makes sense for that basin to continue.
Yeah, great. Thank you. All right. Okay. Ladies and gentlemen, I told you how much lunch costs. I can't afford dinner. So I just want to get on with the thank yous and for Steve. One of the things we do here, gentlemen, is we give away the Eureka flag, and we do it with a hand over heart because we don't like to think of it as being the property of the CFMEU. It's the miners' flag, and Steve always tells the story really nicely. So I just thought, Steve, if you wouldn't mind.
Thank you. I'll tell it quickly as well. So this is the flag of the Ballarat Reform League. It was first flown on the 29th of November 1854 on Bakery Hill, just outside of Ballarat. 10,000 miners had gathered that day in protest against overt government regulation and heavy-handed collection of taxes. A hotel might have been burnt down on the way through, and some people arrested for that. They sent a delegation down to Melbourne to meet with the governor to seek the release of those that had been arrested for what I think was an accidental burning down of a hotel. And they came back empty-handed, and that, of course, incited the anger and disappointment of those 10,000 miners who had gathered to burn their miners' permits and pledge allegiance to the flag of the Ballarat Reform League. And it's the flag that flew 4 days later on the morning of the 3rd of December on that fateful morning during that Battle of Eureka Stockade. And it's a flag that we fly proudly as miners because of its founding principles. It's a flag that predominantly represents rebellion to overt government regulation and imposition of unreasonable and unfair taxes. There's no better time, I think, for this flag.
And royalties.
And royalties. We'll talk about Queensland. Yeah, of course, New South Wales is a lot better on royalties. But I can't think of three gentlemen more fitting to receive this flag than the three gentlemen we have on stage here today. And don't forget our fifth speaker down there on the table. So thank you to you, gentlemen, and thank you to everybody.
Thank you, everyone. Thank you for having us here today with Coal Australia. You'll see on your tables there are some hats, some lapel pins, and our annual coal report. Please feel free to take as many hats with you as you like, the lapel pins and the reports. Thank you to Rob Bishop. Thank you to Andrew Boyd, and thank you very much for your attention and having us today. If you haven't yet signed up to be a friend of coal, you can go onto our website, coalaustralia.com, and the details are all there. Thank you very much.